In this video, I'll be explaining to you guys what is meant by market structure in a very simple and easy way, because market structure is a crucial thing which you need to know, because without knowing market structure, you are trading in a market, you are just gambling. So knowing market structure is a very important to avoid gambling and to generate profits and to know clearly what's happening in the market, like whether market is going for the buy side or to the sell side, or whether it is consolidating. To know these things, you need to know what is meant by market structure, and I'll be teaching this to you guys in a very simple and easy way. Hi, this is me Jagan, and let's get started. If we see here, this is called a bullish market and this is called a bearish market, and this is a consolidating market. And why did I call this a bullish market? Because it is breaking its high by itself and pushing up higher and higher, and this one for the bearish market, it is pushing down lower and lower by breaking its lows. That's why this is called a bearish market and this is called a bullish market. And when the trend is not breaking either its highs or either its lows, then it is called as a consolidating market. And how did I decide whether it is breaking the structure or not? I'll be explaining this to you guys in a minute. Let me grab this. Yeah, here it is. If we see here, whenever the market is pushing up higher, it is retracing itself lower, because this retracement is crucial for the market, because market cannot just keep moving itself highs or to the lows. It just need to get for a retest to grab the orders, to grab the liquidity, and that's what here happening. The market is retracing back, and now the market pushed up higher by breaking this high. Since it broke this high, this became its recent high or the swing high or the new higher high, and this part out here, this became its recent low or the new higher low. And now once the market pushed up higher, it's again started giving a retracement to grab the orders and to grab the liquidity. And when this is happening, most of the people think like, since the market is retracing back, the beginner traders or the guys who don't know about trading, definitely they're gonna enter into this position for the sells, and because of that, liquidity is gonna build up here in this region, and the big banks or the big institutions who are trading in this markets, they're gonna push up market higher to grab these liquidities and to take their profits, to take their capital precisely. And this is what happens if you don't know what is meant by market structure. You're gonna be the liquidity to the market, and your capital is gonna be the big institutions' profits. So know what is meant by market structure, and this is what is called as bullish market. When it comes to the bearish market, here the market is pushing down lower and lower. And how did I say the market is pushing down lower? Same thing which I have applied to bullish market. Here I can see that the market made its new lower low or new swing low or the recent low, and the market again not pushed down, it retraced back to fill these orders which are lying down here and to grab the liquidity which might be lying down here. And market has grabbed those liquidities, and since it grabbed its liquidity and went to its supply zone, demand zone, support and resistance area, or whatever the name you wanted to give, it grabbed its orders, and then it just went to push down lower to break this structure, to grab liquidity which is lying down here and to make this as a new lower low or new swing low. Again the market pushed or retraced back higher and grabbed all these orders which are lying here and grabbed the liquidity lying down here in this part, and again market just pushed down lower and lower. And this is why we say this as a bearish market. It's just a very simple way I can explain according to my knowledge. And when it comes to the consolidation or consolidating market, market doesn't break either its highs or its lows and just keeps pushing up in just one single region in a sideways. When this happens, the market is said to be consolidating, and most of the time if you are a beginner or an intermediate trader, you need to avoid these kinds of market, because you don't know where the market is going to push, like whether the market is going to push up higher or to the lower. Since you don't know where the market is going to push, you need to wait till the market breaks any one structure, like either any one side. If the market pushes down lower by breaking these lows, by grabbing all this liquidity, and still if these highs are left over like this, then there is very good chance for the market to push up higher and grab this liquidity or grab these highs. And since you are hearing this liquidity word many times from my mouth, let me tell you something. Liquidity is a very important and key concept which you need to know when you're getting into markets, and in my upcoming videos I'll be explaining to you guys what is meant by liquidity, so don't get tensed about it. So yeah, this is what market structure means, and this is how I can explain to you what is meant by market structure and how to identify the market structure. And this is moreover like a book theory. In actual, market doesn't look this clean to you guys. So now we're gonna see some examples for market structure. So if we see here, how can I say whether the market is pushing up higher or lower? If you are a beginner, or if you don't know what is meant by forex market or stock market, then you're going to definitely get confused or just break your head what's happening with this chart, because you won't even knowing what's happening in this chart without knowing what is meant by market structure, because you're going to just see some candles with some wicks, some red or green candles. In my case there's blue candles, sorry for that. So if you are a beginner and without knowing market structure, if you are coming into markets, you won't be knowing what's happening in the market. But if you are a guy, a beginner guy who knows what is meant by market structure and how to identify it, it is a very simple way to say what's happening. And let me explain to you guys what's happening here. Let's say, let me turn on the magnet. Let's say this is the lower low. Sorry, let's say this is the lower low, and the market just pushed up higher to this high, and again I got a retracement back to here. The market gave a retracement. As I said, the market can't push itself higher and higher. It needs some liquidity, it needs some orders. It has found its liquidity in this region, it grabbed its order, and then again it just pushed up higher. Straight away gave very big push up to the higher. And then if you see here, market cannot keep itself pushing up higher and higher, and at one point right out here, market just pushed down lower. Sorry, it's not a push down, it is a retracement. Market is showing its retracement back till here. If you see here, market just retraced till back here, and now market just pushed up higher to this region up to here. Let me draw this, and it gave a retracement back to here. And again if you see, the market pushed up till here, and it tried to give a retracement by, sorry for this, and this made its new swing low. Market pushed up higher, made a new swing high by breaking this recent swing high, and again market pushed down lower by breaking this recent swing low, and market become bearish. And how did I identify market became bearish? Because the market broke this recent swing low. When the market breaks the recent swing low, this point, not this, not this, or this, at this point at this region, then I would say market is pushing down lower. And again, if the market is breaking this high in a bearish trend, then in a bullish trend, then I would say market is pushing up higher and higher, and I need to see for the buys itself, only for the buys. And now since the market broke low, that is broke this recent swing low, now this area out here, it's gonna be our recent swing low, and this area out here, it's gonna be our recent swing high. That is, this is gonna be our, let me draw here, this is gonna be our lower low or swing low, and this is gonna be our lower high or swing high. And since the market again broke down this swing low, and this part right here, it became as a lower low or swing low. And now if we see here, again market gave a change of character, that is, it broke this high by making the trend to the bullish side and saying that now I am going for the bulls or for the bullish market or for the buys. So this is how you identify how the market is moving or how the trend is, and this is how you can say like what is meant by market structure. And let me tell you again, knowing market structure is a very crucial and important thing. And if you still have any doubts, let me know, I will clarify it to you guys. Let us wrap up till here. So yeah, this is what I thought of explaining to you guys today, that is what is meant by market structure. In my upcoming videos, I will be explaining to you guys a little more about the markets, how to analyze them, how to place the trades, how to use the MetaTrader, and etc things. And we will be having even a good talks or random talks about the businesses and even about the forex market too. I can only say one thing, you and me are not gonna give up at all, and I know that. See you in the next one. Until then, peace.